Thomas, just what, for our clients who are watching this, what's a pivotal moment, that really set you on your path in the property market and even in your career in property to advise people on that important asset? It's people's most important asset. It represents the largest amount of money people pull into something. So what is a pivotal moment?
Yeah, look, I probably got a little bit lucky, to be completely honest, when I kind of came across it. But prior to getting into this, so around year 2000, I was working full time, and I basically managed to get a job at National Australia Bank back then, and ended up kind of finding myself doing mortgages. Kind of never sat down and said, "Hey, this is what I want to do with my life." But kind of thought, getting into a banking institution was great, and the structure and the framework and the network was amazing. And I started doing mortgages from pretty much, I would have been 20 years old, maybe 20, 21 years old. So I was just lucky that I had exposure to property from a very young age. And I think at that time I was a bit uncertain what career path I wanted to go down. And then I think just having that exposure to mortgages and property, and, I was doing multiple mortgages every week. And I remember thinking, bloody hell, everyone's buying houses. So I remember thinking, God, everyone's into this. And I thought, this seems to be a pretty good idea. And I don't know, just started just having that exposure. People were investing in property. There was people doing property development, and a lot of people buying homes. And I just thought, wow, everyone's doing this, and I'm not. So that ended up, I guess, sparking my interest. And I think, well, I need to save a deposit, and I need to get a part of it. So I literally started. I must have been 20 or 21, and I started saving for my first deposit. I didn't have Bank of Mum and Dad to help out back then, so I literally just started saving a deposit, and decided to buy my first property in my early 20s. So that was definitely the start of it, and then it literally came to the stage where I thought, okay, I've saved. I'll never forget. I saved $33,000. And I was about 22 years old. So I'm 44 now. So 33,000 was all the money in the world to me back then. So I saved really hard, and then I just started looking at houses. And then I remember thinking, I have no idea what I'm doing here. And I just remember, do I buy an apartment? I could buy an apartment, like similar to yourself, like an Armadale back then. I think back then I had 270 grand as my budget, and it was either kind of buying an apartment closer in, or do I buy a house a little bit further out, and what do I do? And I was just looking at really bad properties, and all the agents were trying to sell me stuff, and I had no idea what I was doing. And again, just by chance, one of the girls I worked with, who I was friends with, her brother was one of the first buyers advocates in Melbourne, and this was 20 odd years ago. And I remember I got a real kind of taste for, buying mortgages. And then I was looking at houses. I started going to auctions, and I was watching. And auctions are a great way to get into real estate, especially in Melbourne. They're exciting. And then again, just by chance, a friend of mine says, "Oh, speak to my brother. He's a buyer's advocate." And I thought, what the hell is that? And 20 years ago, no one knew what a buyer's advocate was 20 years ago. So I said, yeah, it sounds like a good idea. And then met with him. And, I think as a young 20-odd-year-old kid, and you see someone with the nice car and the nice big house in Elwood, and I thought, geez, this guy's going pretty well. And he was only 10 years older than me. And I thought, wow, he's going all right. And then I just thought, what a great job. You actually advise people what to buy. And you get paid for it. I just thought it was the best thing in the world. Because I remember back then, especially 20 years ago, real estate agents had a real stigma, the dodgy selling agent. And I always thought, gee, real estate's really cool and it's really exciting, but I just kind of never saw myself doing real estate, But then as soon as I kind of learned about this whole buyer's advocate space, I was like, wow, this is incredible. You get to work all over Melbourne, you get to buy great houses for people. And he gave me really good advice. Like, I was looking at really bad real estate back then, and I had no idea why, and then he kind of educated me on what was good and what was bad, and I think I was hook, line, and sinker from there. I just thought it was amazing. What an amazing profession, and then fast forward 20 years, 1 in 3 people now is an advocate in Melbourne. It's insane. It's insane. So that's I guess was the pivotal moment, was just getting that exposure to property from a very, very, very young age. So
yeah, it's interesting how, you know, if you get exposure to something younger, find that interest, and then knowledge compounds over time, and you stay focused in that area. It's quite a powerful thing, you know, because then you can start thinking a bit more, I guess, interdimensionally around when you have that mastery around a topic, then when you get more life experience, it can start to apply to other areas, which will probably come in handy with some other questions.
Yeah, but I think also at that time, real estate became digital. Like, I remember when I first started, I literally used to buy the Age newspaper every Saturday and look up houses. Now, if you're 33 years old, you'll probably just go, what the hell was that, you know? But we literally used to have to wait for the Saturday Age newspaper to come out with all the listings, and then you just have to literally turn up to houses without any photos, without any floor plans. You just literally had an address, a brief summary, and a price. Now, that's how when I first started, that was just over 20. And then around that time, realestate.com and domain, you know, started. So at that time, it became digital as well. So it was that early 2000s was a very, very new time and a very different pivotal time for real estate as well. So yeah, that whole explosion of online was insane. I'll never forget it. So.
All right. So Thomas, big, I guess, consideration at the moment, and it's really interesting for me from a financial point of view. You know, I studied economics as well, as generally when interest rates go up, you know, if you look at the early 90s property market, even late 10s when we saw, well, not late 10s, but more around with a couple rate rises, you'll find that there's a lot of sensitivity on house prices. You know, that when they go down, prices go up a lot, and we've seen that. But when they go up, the inverse can happen a bit. Not so much as what it's like when the rates go down, but it can really pull the market back a little bit. And what's fascinating is we've had the largest rate rises in terms of the momentum of those increases, the speed of those increases than we've probably seen in recent history. And at the same time, the market has gone up. I mean, you're looking at a situation where average person on an average salary can't, you know, their borrowing power has gone down and prices have gone up. What are your thoughts on, firstly, why that is the case? What factors are influencing this? And what can people do to still get into quality assets, which unfortunately cost a bit more money?
Yeah, I'll tell you what, like 23 odd years, 24 years of finance and real estate, I'll tell you what, the Melbourne market just never ceases to amaze me. It's, you know, I've seen, I 1000% agree with you that interest rate, I reckon there's no bigger driver for market conditions than interest rates. I think if it's anything that's relatively consistent in Melbourne, in my time in the game anyway, it has been that driver. But what surprises me is that, you've got generally, interest rates come down, the market gets quite hot, and then interest rates start going up, and it doesn't really drop the market, it just levels it. That's what I've seen the majority of the time. And as you were mentioning before, I mean, I've seen GFC, and where Melbourne, the market was still pretty resilient in one of the worst times we've ever seen. Then we saw the rate rises of 2010, 2011. I think off memory we had about 5 rate rises over about 12 months. And that just slowed down what was already an extremely hot market coming out of 2009, 2010. And then we had the rate drops, which went from literally 2012 to 2017. And that was a 5-year run. Like we saw, Melbourne was just, it got hotter, and over 5 years, the Melbourne market just kind of, really kind of it was a very, very hot and consistently hot market for 5 years with rates that low. Then we look back at 2018, 2019, that we had the Royal Commission. That definitely slowed things down because the rates didn't move, but it just was taking a long time. It was very, very hard for people to get finance at those times. But and then we had COVID and this, and no matter all these trends, you're running pretty hot or it's relatively stable. And if we look at the last cycle, so coming out of COVID is the hottest market I've ever seen in my life. Like that was, I reckon I've still got PTSD from how busy we were in the second half of 2020 and 2021 and even the first half of 2022. I've never seen such a demand for people, especially to upsize their home. And, in a time being a business owner myself, that early stages of 2020 where you're thinking, wow, how's this going to turn out? You start thinking, how's this going to play out where it's a 1 in 100 year event? And, it had the complete opposite effect where we literally were hiring people to keep up with the demand. It was crazy. So, Melbourne just never ceases to amaze me. But if we look at, I reckon we are coming out of the current cycle, is my view. So rewind 18 months. So, let's call it the first almost 2 years, the first half of 2022, still very, very, very hot market conditions, super low interest rates, still in that COVID kind of market where everyone was upsizing. Naturally, everyone wanted a bigger home. They wanted bigger land. Everyone started working from home, you name it. And everyone was pouring money into real estate. Then I think it was April or May of memory, 2022 at the first rate rise. Then we had, a few in succession there. And what ended up happening in that kind of second half of 2022 was we thought, okay, interest rates are now on the move. So what normally happens in that environment, and what I'd seen time and time again, is when the market or economy gets a little bit shaky, people what they do, and we predominantly work with home buyers. We work with investors and developers as well, but predominantly home buyers. What normally happens is majority of people when they're buying homes, they're upsizing or downsizing. So there's another asset there to sell. And they're normally working out what order they do it into. They buy first or sell first. What normally happens when, let's look at the GFC, the early stages of COVID, even the Royal Commission, all those markets that I know very well, it was a bit wobbly. So people will generally sell the home first, bank the money. Let's say you've got a house worth $1 million and you want to upsize to a house that's $2 million, for example. Yeah. You'll sell the $1 million asset first and make sure you know exactly what you've got in the bank, and then you can go out there and buy with confidence. Because you don't want to do it the other way around, because if you go out and buy a $2 million house, well, what if I don't get $1 million for my house? I could be in a real, because it's a bit uncertain. So we were expecting stock levels to rise because people would say, right, I need to do something. I still need to upsize, downsize, or change. So we thought people will start what we call a seller-buyer market. So you sell your current property first, and then you buy your next home second. So that's what normally happens, except for this cycle. So what ended up happening was we went into winter of 2022. Rate rises had just started happening, and then we came out of normally stock levels drop in winter. Naturally, everyone goes on holidays. It's not really not really the season to sell. We came out of winter, and stock levels were just depleted straight away, and we were just like, where is everything? We're coming into spring. Where's the stock? It just vanished to the extent I think we calculated back then it dropped by about 45%. Of the normal stock level. That's a huge drop. So it just literally was bizarre. We came out of winter, no stock, and everyone's like, where's the stock? We had the phone ringing saying, where's the stock? Where was it all gone? And it was just this huge drop. And then what ended up happening was stock levels just dried up. So then it became a bit of a scarcity market. So then all of a sudden, and we know single-handedly that was one of the main reasons. That's what kept the property market afloat, or potentially even had some growth, because there was no supply. So what ended up happening, stock levels depleted. People were saying, well, hang on, I still need to upsize or downsize or change, but I've got nothing to work with here. So what should have been a seller-buyer market remained a buyer-seller market, which is what normally happens in a very hot market condition. Yeah. So everyone was, I mean, and because we're working with buyers, we always see the trends first, because buyers are generally dictating the trends. If there's lots of buyers, it heats up, and vice versa. So every buyer was coming to us saying, look, my brain's saying to sell first, but I've got nothing to look at. There's nothing out there. So if I was to sell now, I feel comfortable, but it might take me 12 months to get back into the market, and I don't want to do that. I don't want to rent not knowing where I'm going to go next. So what ended up happening was the buyer-seller trend remained, and then that put even more pressure on stock levels, because all those people were buying first, taking a long time for them to buy because there's less stock, and then their houses weren't coming on the market. So it just became a huge holding pattern. It was crazy.
So you find in finance, you look at, crypto bubbles, you look at other trends, herding, people feel safe in the herd, and there's momentum with, this person's doing it, so I'll do it. You even see it in certain streets, someone will renovate their house and then someone else will renovate. Yeah. I saw that in COVID happen a lot, and then soon the whole casino. Yeah. Do you have any thoughts that, maybe these herding biases, that, when a trend starts, it really piles on? Because to me, that doesn't seem rational, right? That, I'm just going to not do this because of this, and then everyone does it, and it creates a self-fulfilling prophecy. It seems to be a real behavioural quirk. How do you, how do you navigate these? The market we're in now, it's been reasonably strong. Borrowing power is reduced. What tips could there be for younger people who want to still buy quality assets? Do they need to look more regional? Should they, say, get on title with their parents? Should they buy with friends? I mean, you need a divorce in the friendship group to maybe foil that strategy. What other, what solutions are there? Or is it very much there are postcodes out there that still show great value, and maybe focus on those?
Yeah, look, it's always going to be a trade-off between, lifestyle and commerce. So, for example, like we've been in this cycle for about 18 months where interest rates exploded and stock levels were just so low. We've never seen stock levels that low before. I've never worked. Any agent I know that's been in the game for 30, 40 years has never seen stock levels of the last 18 months. However, so in terms of people getting into the market, there has been a shift. So in terms of property investment, so we know, especially in Victoria, so it's probably been the harshest investment conditions I've ever seen in my time for property investment. So what we're seeing, and it was predicted that the second half of 2023, there was more people coming out of fixed rate loans in that second half of last year than the previous 2 years combined. And we saw that. I felt like it was almost like the 1st of July last year. We had investor clients ringing that we bought properties 4 years ago saying, Tom, got to sell, can't afford. And what ended up happening was, we've had 13 rate rises, by that stage last year, there was maybe 8 or 10 or whatever it was. And everyone's like, well, okay, my mortgage has gone from $2,000 a month to $3,000 a month, or, $4,000 a month, whatever it is. I can't afford it. I can't afford to hold my home mortgage as well as an investment property. So we've got literally last year we've had land tax go up significantly. We had a 50% rate rise on the 1st of January last year. We've had another land tax rise 1st of January this year. So all of a sudden, Victorian investors are like, well, we've got the worst land tax in the country now. I've had 13 rate rises that I need to afford. And there's also been so many changes to the Residential Tenancy Act where in Victoria, the tenants hold all the power now. So there has been significant changes. So in Victoria, a lot of investors have started selling, especially in the last 6 to 8 months, which is what the government want, because this is going to basically, and coming back to your question around how do people get into the market, I think especially the last 6 months and probably even more so the last 3 or 4 months, we've had really good stock levels in that sub $1.2 million range, which is where most investors play.
You've been a bit of a pullback in that range to allow, because, when people look at news articles and that, they're like, oh, property prices have gone up, median price, but it doesn't really tell the person.
That's a macro.
There's
very, very macro.
So by the sounds of it, there is value out there for people if they are in that price range. Investors have pulled out. If you actually look at speaking to an advocate that covers your area, you can actually have someone find you the right asset given those stock levels are shifting. So that's really interesting.
Yeah. So what we're seeing and what we've seen is, so what's happening is the investors in Victoria are pulling out and they're selling. And I think a huge part of that is because they just can't afford it, and that makes sense. We know that firsthand because I've never seen more properties for sale with tenants in them than I have in the last 6 months. Because normally you got an investment property, you want to sell, you get the tenant out, you get it all presented nicely, get the style of furniture in. Investors can't afford to sell a property right now without the tenant's rent coming in because rates are so high. So we've seen a lot more properties for sale that have either longer leases, like, it's normally hard to sell a property with a 6 or a 9 month lease or a 12-month lease in place. So we've seen a lot of properties with the tenants in them that are probably still poorly presented. So there's definitely opportunity for people trying to get into the market now in that kind of, let's say 400,000 to 1.2 million bracket. Right now, stock levels are very buoyant in that range, and that's all across Melbourne because all the investors are getting out, and there's not many new investors coming in. So we're seeing now any new investors, which there are still a lot of people investing, they're generally going interstate at the moment, like your Brisbane's, your WA, your Adelaide, stuff like that, South Australia. But property investment in Victoria especially is quiet at the moment. So if I'm a first home buyer trying to get into the market, the keys that you want to look at is look at that price range because if there's good stock available, what happens is you've got more options and it dilutes the buyers. So, let's say 6 to 9 months ago, a lot of the same people were running on the same properties because there wasn't much to choose from. Now there's a bit more variety, so your buyers are spread out, which means you'll get a better price. I bought one last week in Bentley because stock levels have improved. It was around about that $1.25 million mark for one of my first home buyer clients. When that property came on the market, 3 others that were similar came on at the same time, and it just spread the buyers out. So it helped me buy a little bit easier. That the fact that the other 3 didn't suit my client, but they were similar properties. Yeah. So right now,
for listeners is those stock levels. Once they're higher, dilute the buyers, then get an advocate in, start going at it.
Because you still want to make sure you're buying a good asset, and the other thing is as well is to check with your banks as well, because there are packages out there that are helping first home buyers. I mean, we had one client that managed to get a 95% loan without LMI. So I think it's if you can get in with minimum amount down and get a good mortgage package, obviously bank of mum and dad to help out wherever they can. But I mean, I think we've got one client at the moment who's she's getting in on a 5% deposit, and her budget's only under 600,000, so there's no stamp duty for a first home buyer. So she's getting in literally with 30 grand. So yeah, there are good packages out there and government schemes to help first home buyers get into the market. But now's the best time we've seen for 18 months in Victoria.
Interesting. Yeah. Yep.
Mm.
Just a couple of questions to get through, just for time.
Mm-hmm.
Regional areas. So in COVID, we had all these regional areas go up, areas that
Exploded.
people used to laugh at, well, I wouldn't live there, and they've exploded.
Yep.
What are your thoughts on those areas continuing that growth? Or do you think that, look, COVID's now past the back of the mind, a bit of re-centralisation is going to occur? What would your thoughts be on that if someone's looking to buy now? Would you be potentially, I grew up in Geelong. If you just went to go there now, could you be probably flying in at the top or one of those sideways sort of holes you've talked about? And, just for people who are thinking about, and they don't have to be a first home buyer, it could be an investor or a wealthy individual looking, would regional be something to look at the moment? Or do you think re-centralisation's occurring across the major cities?
Yeah, look, I think regional, peninsula, those kind of areas, they're always going to be the most volatile because they're not metro naturally. So, for example, during COVID, I've never seen regional or peninsula. That almost doubled in 2 years. I've never seen that in the peninsula. But we also knew that was going to have a very harsh comeback. Pullback because it had such a sugar high for 2 years, and to the extent we were literally rejecting business. People wanted us to buy houses in the peninsula, and we were just like, we're not going to do it because it was so hot. I
remember looking at Red Hill going, because I love that area. I'm looking there going, wow, this is crazy. Like something that was 2 million is now 4.4. It's just
correct. It was insane. Well, the rates were so low, everyone wanted to get out of Victoria. I mean, exactly right. I had one client bid on the property that was quoted 2 to 2.2, and it's sold for 3.6. And it was just impossible for us to see logic, and we knew it was short term. But in saying that, those areas have definitely pegged back now because obviously COVID's calmed down. So I reckon after almost a double in a couple, 100% growth in a couple of years, it's pegged back about 30% now. So what you'll find is, I think with regional, you'll either find that a lot of those people that moved out are starting to move back in. We're seeing a truckload of people who are obviously people that have holiday homes or investment properties. They're selling now as well, because if you've got a $2 million holiday home, think about it, you've got 13 rate rises and your land tax has just gone through the roof. So there are a lot of people selling. I still think I still think there might be a bit more of a drop in regional and peninsula in those kind of outer skirt areas, because I just still think with what's happening with rates, until interest rates start coming down, I think that they're going to continue to gradually drop. So I wouldn't be rushing in right this minute now, unless it was like a holiday home for you and you don't really care if it comes back a little bit to 10-year or 20-year play. So, but I wouldn't be rushing into regional or anything right now, because I think I think they're still going to come back.
Yes,
a little bit. So,
and,
but if it's a lifestyle choice and you think, well, I just want to move to Geelong or I want to move to wherever, and I'm going to live there for 5 or 10 years, and it doesn't really matter if it pegs back a little bit. It's about finding the right home. So
so maybe get if you someone who's in a major city like Melbourne wanting to say there's a lot of supply, so there's that spreading the buyers. Probably a good time to do that, and then maybe then look for the holiday place. Whereas, if we're in COVID and there's those forces happening, you could have gone and gotten the regional property and benefited from that. Maybe, get the principal place of residence sorted first if you you have a need to live in that area. And mate, just quickly for time, got a couple minutes. So tell us, outside of your professional life, what are you passionate about? And, what are your hobbies, and how does that influence your approach to advocacy compared to others?
Yeah, look, I mean, I've got a 3.5-year-old son, so my my last 3.5 years have been focusing a lot on him. So, and I think you could almost say most hobbies are out the window at the moment. But but like I've got a 3.5-year-old, so everything I do is for him at the moment, and he just started at Wesley this week. He's ELC3. So just getting used to all that stuff. But look, I've loved to travel. Traveling's definitely my number one hobby. I've had the pleasure of living overseas. I did about 4 years real estate. I did in London and Dubai many years ago. So in my earlier years, so yeah, living overseas and travel is definitely my biggest hobby. Get very inspired. When you go overseas and you just get so many great ideas, stuff like that. But yeah, I think as well, mate, I'm very home proud. So my house is. I know it sounds a bit stupid, but I think if you're going to be, in the property space for 21 years. I think you've got to have a pretty good home, and I love my house a lot. So I'm always pottering around the house and doing things around here as well. I think your home is your castle. So I love my house, and I'm always doing tinkering around here and doing bits and pieces. But and I also do a bit of writing as well, just journaling, writing. I help find that really helps keep me creative. And it's a very, very good pastime for me. So love doing a bit of writing whenever I get 2 seconds. So
Yeah, mate, that's awesome. No, it's about you got to have those things that recharge the batteries. Having a 2-year-old myself, it's they take all your attention. If you don't give it, they start throwing the tantrums.
Oh, absolutely. Yeah. Wait till these I went through the twos and now he's a three-nager, as they say. So the tantrums get insane. So but it's amazing. It's the best thing. He's amazing. So it's very demanding. So
yeah, mate, awesome. All right, Thomas. Well, mate, we're gonna have to wind that up, but that's good. And
nice one.
there's a couple insights there. Loved the that I just picture all those. You've got more stock on the market, the buyers separating their attention. You can just picture that being a good rule of thumb no matter where you live.
Yeah.
And
no, this has been the best stock we've seen for
right.
18 months. Yeah, this is I've been very surprised the last 3 to 4 weeks. Stock's been really good. So mate, stock levels and interest rates definitely, they're probably the two biggest drivers. And when interest rates are, or stock levels are high, capitalise on that because
it seems like
as
it's a
we're
good
doing
time
right
to
now.
potentially get in now before a rate cycle switches. Yeah, and go and
Well,
pick
that's
that
what we're
up.
seeing. Yeah, if it's probably to end on this note, and that's what we've seen. Like we had record sign-up levels in that, in Q4 last year. Normally, our sign-up rate drops because people don't start towards the end of the year. They generally start in January. But October, November, December, we've never had more sign-ups in a year than we did in that quarter, which is incredible. And the way this year has started in terms of, like I said, we work with buyers, so we see the trends early. We've had a record January sign-up level. And the question we're asking everyone is, why are you buying? Why are you buying now? And everyone is saying that we think rates are coming down. So we think this is the better window to buy because rates are coming down this year. As soon as rates come down, property prices will go up. So I don't have the crystal ball. I personally think rates aren't going to come down until next year.
I'm
But
looking at inflation data and where the target is, and I think there's a bit of wishful thinking there, but also, you never know, they could. So you just see how it goes. So,
but that's what people are thinking. So anyway.
From an investing hat, long term's always the name of the game. So if you're got a bit of a buffer of whether they go up or down, just ride it out.
Yeah, exactly right. It's always it's a long game property, so it can be very successful if you get it right from the beginning and you play the long game. So yeah.
All right, Thomas. Well, mate, thanks
Cool.
for your time, and mate,
Thanks, Cody. Appreciate it.
Yeah. We'll look forward to sending more clients your way as well. You've helped with some extra ones, and really good to meet you, and we can build a really good relationship with your business.
Awesome. Thanks, mate. Look forward to it. Thanks so much for having me on.
All right. Thanks.
Thanks, mate. See ya. Bye.